I didn't bring my water down. Okay, folks, I'm late. I'm sick. We're going to be doing an abbreviated version tonight. So, yeah, I got a really, really bad cold, and I wasn't going to do a show tonight, but I figured, you know what? Let's tough it out. Let's at least do a half a show because we had a lot of news that came out on Friday. We had the Supreme Court decision. We had some really bad economic data that came out on Friday. The GDP came out disappointing. We'll talk about those in a moment. But first, let's kick it off with the futures. And again, I apologize for my voice. I'm drinking tea with honey, lemon, everything to make this go smoothly. So let's get to it. All right. So we're looking at the, let's go to a 5-minute chart. We're looking at the E-minis opening up with about flat. Not much happening here. Bias to the downside. Let's check in with the Qs. Sorry about that noise. We have the NQ, which is, I think I have the wrong glasses on. I can hardly see here. Which is about flat as well. Yeah, they got the wrong glasses on. About 0.7%. But we're reversing off the lows. All we're going to do is this, create an alert. Let's check in with the small caps. Small caps are down measurably, and they're just off the session lows. Down nearly 1/4 percentage point. Let's check in with yields because that could be a driver. Yields are moving up higher. That could be influencing the NQ lower. Sorry for the display. Volatility. Moving up, but well off session highs here. So the knee-jerk reaction by the market tonight was to move lower. However, with the exception of the Russell, not grand moves here at all. Let's say hello to folks. Franklin, it's coming down. It's coming down. They just closed the roads in New York after 9 p.m. I don't think you're supposed to be on the road. Hey, Tim. My pleasure, man. We didn't do it last week because of President's Day. We didn't do it the week before because I had whatever the issue that came up. OG1, hey, thank you very much, pal. Sure. You have a monster option position. Okay. Jody, the lovely Jody. Mr. Pete, welcome. Paul, welcome. How dare you? How dare you? Talon, welcome. All right. Let's get on with this. Let's talk about gold. Wow, gold moving up here. Gold's in fuego. And it's got a good reason to be in fuego. That GDP report that came out on Friday was weak, yet inflation came out hot. That's stagflation. That's good for gold. So gold 51.48 the ounce. We sold a portion of our position, but we still have a position in gold and the mining stocks. Silver, big move here at the open, up. God damn, I can't see this. I have the wrong glasses on. 3.92%. These are my driving glasses. I think I have these as, yeah, these are the readers below. What else we got? Let's check in with the dollar. Now, the dollar had a strong week last week, but it hit resistance on a weekly time frame. So we're seeing a pullback here. No great shock. Let's check in with oil. We put on a long bet on oil, not last week, the week before. Oil is at current moving lower. Natural gas. Big move up here at the open on natural gas, 5.42%. So I think natural gas is looking interesting here. We held support for the past couple of weeks. I'd be good here with selling puts. Ideally, I would be selling a put spread because natural gas is so volatile. I wouldn't want to go naked by selling puts. By selling puts, it means I'm bullish on natural gas. When I buy puts, it means I'm bearish. So I'm becoming more bullish on natural gas. There's money to be made by selling premium here at these levels. And I haven't been bullish on natural gas in a few weeks. What else we got here? Let's check in with, did I do everything? Let's just do live cattle. I haven't looked at this in like 2 weeks. Approaching all-time highs. Possible double top, though. Let's stick with the weekly view. Let's go to ZW. Wheat breaking out. Very nice trade. We have resistance immediately above. But it looks as though wheat is moving up higher. And you can buy WEAT, the ETF or ETN. Even soybeans are firming up here. Higher lows on a weekly time frame, beginning to break out. Lastly, let's talk about corn. Corn not doing much, but consolidating very, very nicely. We broke out the week of the 2nd, and we are doing the second retest, or did the second retest of that breakout point last week. So this is looking good. I think corn's going to move. I may put on a speculative bet here. Long corn. I think we touched upon everything. All right, let's go to, I want to save time for chart requests because I am going to shut this down at 6:30 tonight because my voice is already, as you can hear, going. Okay, economic data that came out on Friday was no bueno. Here you have it, GDP. They expected a 2.5% read on GDP. That was 1.4% actual versus a prior read of 4.4%. Then you get the PCE index. Remember, the PCE index is the Fed's favorite measure of inflation, not CPI, not PPI, PCE, and that came out hot. So the impact here, and this is why you got to keep an eye on stocks. The impact here was that mid last week in June, there was a probability of a cut of 70% in June. Why June? Why not April? Why not March? The reason is that new Fed chair, that will be his first meeting. June. Nobody expects a cut in April. They haven't for quite a while. June was the go date. Now it's a coin flip. So this is a liquidity problem for the markets, potentially. Now, coming up this week, we're going to have not much. It's a quiet week. We do have consumer confidence. That's a good one. But a lot of Fed heads coming out there. On Friday, more inflation data. We're going to have the PPI. That's the producer price index, the measure of inflation at the producer level. So it's going to be really a week about one name. This is NVIDIA week. Forget about all of this. Maybe Home Depot. But for the most part, the Pimp Mac Daddy of earnings this week and probably for the quarter is going to be NVIDIA. Salesforce.com, nowhere near as impactful as NVIDIA. Snowflake reports, CoreWeave. That's a company you got to watch out for. Big problems at that company. And Rocket Labs, great company. One that I would like to buy for the long term on a pullback. And that's about it. No real market movers next week except for NVIDIA. Now, in terms of where do we go from here? You know, this is the chart of the Qs, and we're using TrendSpider, automated technical analysis, and link below, get 35% off. We have the Qs that have just been consolidating for quite a while. Now, we covered shorts last week, and we didn't get out at the lows, but we avoided the whipsaw of Friday, and we're sitting in cash right now. We have a hedge on versus that short position on TQQQ, which puts us long. We're still holding on to that, but it's not a huge position. So I think that looking at this chart, daily view, and we overlay the trend lines, you can see that we've just been consolidating and not doing all that much. And when you overlay my drawings, you can see that they're pretty accurate. And we have a fairly good support level below. Now, that doesn't mean that we can't move up higher and then break to new lower lows. It's entirely possible. And I just didn't see the wisdom of fighting a potential reversal here, being short at resistance, no follow through after this big down day on the 12th. It made me nervous to be short. So we made money. We left a little bit on the table, but we made money. Now we're looking for either A, a re-entry point, or B, if we do gain footing here and they're going to take this market up higher, we'll add to our long position. If we break support here, looking at new weekly lower lows, we'll probably reestablish shorts, take that hedge off to the long side, and be net short of the Qs. We do have long positions in individual names. They're doing really, really well. So we're technically hedged with other cyclical names, chemicals, energy. They're doing well. They'll hedge our short position if, in fact, we do get short again. Right now, this chart here is telling me not quite yet. Don't reestablish short. Now, let's talk a little bit about tariffs. So I think there's a major misconception about what happened last week, and this could be why you're seeing some weakness in equities tonight, because it didn't make sense, the market's reaction. Because if you took a look, oh, it feels so good. If you take a look at the reason of as to why, the Supreme Court struck down those tariffs, it was basically due to the fact that the power to tax lies with Congress. That's accurate. I don't debate whether or not the Supreme Court's ruling was right. I think it is right. So that couldn't have been a surprise at all. So one has to ask themselves, if you have a 4D chess player like President Trump, what's up his sleeve next? You can't just think he's going to lick his wounds and walk away. It's not going to happen. So I was remembering back to his first term when he slapped tariffs on China. And I remember Biden kept those tariffs, and I even double-checked on ChatGPT. And so I said, well, I'm a contrarian, so I don't agree necessarily with the bullish sentiment of the market last week. So what are the next steps for the president? One is that he already took it. Section 122, the Trade Act 1974. That's been imposed. I think he went 10% initially, then he went up to 15%. So the issue here, maximum 150 days. And he can't go 150 days and then reinstitute 150 days. Can't do it. So what he's going to do next is this. Section 301. This is what he used against China. Unfair trade practices. You got to remember that we've set up, since these tariffs went into place, trade deals with the EU, trade deals with Britain, other countries as well. So it's really China that these tariffs are meant for. So he's going to use this, Section 301. The tariffs aren't going away. So I think that the markets are going to have to come to that reality and say, while he may have lost the battle, he didn't lose the war. Let's see what's happening here with the NQ. We remain down. We've given up more ground here. So this is a market that's kind of struggling tonight. Now, I don't know why that's up here. What we're looking at here at the Contrarian Trader for whether or not the tariff trade is still on, I'm looking at trades like, this is a ratio chart of Caterpillar versus S&P 500. Why are we doing that? Well, the tariff trade is all about the reindustrialization of the United States, capital expenditures. So who does well? Caterpillar. And you could see that Caterpillar, relative to the S&P 500, has been doing very, very well. Did it take a rest last week? Yeah, it did. But it's still in a very healthy uptrend. The pullback on Friday was not a disaster. We're still holding a bull flag setup relative to the S&P 500. So the tariff trade is still here. I think bulls got it all wrong on Friday, and now they're starting to wake up a little bit and smell the coffee. Another measure that we're looking at is UNP, Union Pacific, relative to the Dow transports. Why? Railroads, especially North American railroads, are pure plays on what stuff is getting shipped in North America. I mean, FedEx, UPS, that's all international as well. So it kind of muddies the pool a little bit. But you look at the railroads for what's being shipped from port to factory, etc. From factory to port, that's your pure play. So you look at UNP, and UNP over the past several weeks has been outperforming the S&P 500. What does that tell? Outperforming the Dow transports. What does that tell you? It tells you that the markets aren't believing the story yet. The tariffs are going away. And the last one is this. This is a mixture. STLD, Steel Dynamics, and Nucor. So this is an average of the, not an average, it's a ratio chart of the two in candlestick. And these are North American steel producers. So you would think that if they were worried about the dumping of metals into the U.S. market due to the fact that there are no more tariffs, that these names would get clobbered. They didn't. They're not outperforming the S&P 500 yet, but they're not all that far behind. And Nucor relative to STLD relative to Nucor last week did very, very well. It was up. So these are the charts that we're watching. Don't go listening to CNBC and these commie organization news outlets. The tariffs are here. They're not going away. So don't let them take parking space up in your head. I will. I always listen to Adam. Thank you. Lee Cable, welcome. Have you seen the news, Trump? Yeah, I did see that. You know what? I'm kind of tired of no handcuffs on these people. So I have no comment on the situation. We need to see purple walks. This Susan Rice, her hands are so dirty, and the fact that she's still walking around, Trump, he's got to do something. He's got to get the DOJ to arrest some people. We need perp walks in this country. She's too arrogant. Scott Bessent. And I'm not saying purple, excuse me, sorry about that. I'm not saying perp walks if people didn't do anything wrong. I think that she did a lot wrong. I have no evidence. My opinion, Susan Rice, arch criminal. She should be perp walked, in my opinion. I have no evidence. Scott Bessent said that they have a lot of tools to use for trial. Yes, they do. The president has extraordinary powers. All right, let's do some chart requests here. I know you guys are probably tired of hearing me right now and my nasal drone. Let's do some chart requests. I got to refresh this. I'm going to move this over. All right. Let's bring our friends over at TrendSpider, folks. Don't forget, TrendSpider, our sponsor. All right, we got Paul with Oxy. Let's start it off. Beautiful chart. All right, Paul, this is really, really good. Let's clean this up. I don't need the automated trend lines here. So I think that this is a powerful. This is a powerful chart. We had a major breakout last week on Oxy. Would I buy it here? No. Would I buy it? Yes. Where? Here. You show me a retest of anything below 51. Excuse me. Yeah, anything below 51, I'm a buyer. Oxy, bullish. I think it's going a lot higher. In fact, if we hit it next week, I'm going to be a buyer myself. Remember, energy has had a very, very good run so far. It's very extended. So don't go chasing these names. And when I say extended, I mean short-term extended. It needs to consolidate, pull back, and it'll go back up again. All right, we're good to go. Daily view. Yeah, this is a third standard deviation Bollinger Band, folks. See, third standard deviation Bollinger Band in red. We're into that 3D Bollinger Band. You're not supposed to be there. All right, so let it pull back. That's a short-term view. Long-term view, I'm very bullish on Oxy. LXU. Okay, this is where the automated trend lines come in. I'm not familiar with this company. We have gone from a long-term bear market into a new breakout in an uptrend. You have topping tails here. I think that this stock here is one where you can dollar cost average in. The one thing I would be concerned about here, weekly time frame, your up volume has been declining sequentially, and you have these topping tails. What that tells me is that, let's go to a monthly chart. What that tells me is that you have a little bit of resistance above. Right there. The buyers from back in June, July, August of 2024, they want their money back. They sat with this stock going from 10.03 all the way down to $5, 50% haircut. They just want their money back. So it's no slight against the company. It's just that psychologically, they're not looking to make money anymore. They just want their money back. Simple as that. Overhead supply. So it's going to have to work this off. It's going to take a while. And you do have, not just from 2024, you have buyers from 2023, June through October at those levels that got burnt as well. So lots of overhead supply, dollar cost average in. I would be a more aggressive buyer on a close above $10.30 per share. That gets you beyond that overhead supply, bullish. IBIT. I see no redeeming value here yet. Oh, interesting. Weekly chart. Automated trend lines. Gotta love them. All right, so the trend is clear. It's defined. It's down. However, we popped off of the lower band of the downtrend channel. We have support down here at around $35 a share. I'm okay with nibbling here. Tight stops right below these support levels. You get a break below, let's say, $34.50 per share, out. Last chart up. Tim loves his Trinity. Let's get these lines off. All right, so we got to avoid this. The party's over here. We have failed. The stock has failed. You got to avoid it. We have broken back down into a long-term consolidation. Unless they gap this thing up back above, where is it? 15.25 a share. It's dead money. I only want to buy this stock above $15.25 per share. Until that time, I don't want to touch it. And even if it did close above that level, I would nibble, add on strength. Very low conviction at the beginning, build that position up. And that is it for tonight, folks. Let me go to Oh, somebody wanted TLT. TLT is looking bullish here. I'll be more bullish on a close above $90 a share. I believe that's where your strike is. Hoping that those are calls, because the calls look pretty good here at the money. Looking pretty good. Thanks, everybody. Tim, thank you. Everybody have an awesome night. Profitable trading week. I'll talk to you soon.